Hey there, it's Jason Eichmiller, and this video is all about October reverse mortgage loan sizes. And if you've been with me for a while, you know we're going to go over the HECM, which is the FHA reverse mortgage. We'll go over the proprietary reverse mortgage, which is the non-FHA reverse mortgage. And we're going to go over different ages, 55, 62, 72, 82, 92, and different home values, 400,000, 700,000, a million, and $2 million. Now, it is very, very likely that you're not one of those age groups. You're not 62, 72, 82, 92, or 55, and your home is not worth 400, 700, a million, or 2 million. So if your home is worth less, we help folks whose homes are worth less. We'll help folks whose homes are worth upwards of $10 million. So this is just a guide for you. Yeah, and I think you understand that. So let's go to the slideshow here and see if I can do this without screwing it up too terribly. There we go. All right, there, that's perfect. So yeah, basically in a nutshell, hold on, something changed here. Let me go back. But loan sizes have continued to decrease as far as the HECM goes. So again, if you got a reverse mortgage last month or the month before that, you're in pretty good shape. If you're getting a reverse mortgage now, you're getting a little bit less money than, well, for the HECM, you're getting a little less money than you were for previous months. But I also expect November, December, and January, I expect these loan sizes to keep on dropping. So we'll go through this real quick. And this is actually what I get. This is an internal email from one of my investors. I've whitened out the guy's name and the company name. But this is what I get when I know that rates are going to move. So this I got on Friday the 6th, which is about a week ago. Unfortunately, the 10-year, which is kind of the index that we use to determine how much money you can get from these reverses, the 10-year increased again this week, which will result in lower PLFs. And PLF, really it means principal limits or loan sizes. So lower PLFs means less money, higher PLFs means more money. So these are the alerts that I get. Haven't gotten one yet today. It's probably on the way. So look at this. Check this out really quick. How has reverse mortgage money changed over time? You've seen me present these before, but take a look at a 72-year-old with $1 million home value. That's one of the more common-ish reverses that I'm doing right now. Well, back in May, the HECM was giving about 39% of that $1 million, $381,000 loan size. Then in August, it dropped to 364, and now it is 328. So 2 months later, it goes down from 364 to 328. The good thing as far as the proprietary goes, though, is the proprietary reverses haven't really been impacted. They're actually a little bit higher now than they were in May. And later down the line, towards the end of this video, we'll get into the reasons why, why you would want to get a proprietary as opposed to a HECM or vice versa. So again, look at this though, back to our 72-year-old with $1 million home value. Loan size in May was 381, 382. Loan size now is 328. That's a $53,000 difference, which is about just under 14%. That's a big drop. And again, we expect this with all the turmoil, and now we've got the situation in the Middle East, which is just absolutely terrible. Thoughts and prayers for Israel, by the way. Hope you guys do that as well. We expect with all this turmoil, we expect loan sizes to continue to drop. All right, so how am I able to teach you about this? My name is Jason. I'll give you a quick intro to myself. My name is Jason Eichmiller. I own Reverse Mortgage Reality, which is this channel, and that's a DBA of Key Home Lending. We're a mortgage broker. That means I work with a lot of different reverse mortgage lenders. Been doing this since 2008 and have helped a little bit over 460 seniors learn about and get reverse mortgages. This is my contact information right here. Got my direct number, my cell, email, and the website, which I'll show you right now. And it should be flashing on the bottom of your screen too. This thing always just goes. So let me go back here. If you want to call me, obviously you can call me 888-309-9705 and email jason@keyhomelending.com. Or if you want to just schedule a time to chat, you're not able to chat right now, go ahead and go to reversequotes.com and you can put your information in. If you're on a desktop, the information, the form submit will be on your right. If you're on a mobile phone, your cell phone, then the form submit will be right below this. And again, if you're watching this on your TV, then I don't think you can submit information. So just go ahead and give me a shout and I'll do my best to help. If you furthermore towards the bottom of this or farther down reverse quotes, I've got a bunch of interviews that I've done with seniors who have done reverse mortgages and used me to help them. Here is a brand new, not really a testimonial, but a text I've got from Paul. I helped his mom. She's elderly in her 90s. She needed home health care. And it was kind of a tricky case for a couple of reasons. Go down that rabbit hole some other time. But we got it done, and now she has more than enough money to spend on her home health care for the rest of her life. She is going to, it kind of seems morbid, but she's going to die in her home, and everybody is just, the whole family is just overwhelmingly happy and excited that she's going to be able to spend the rest of her life in her home. So I think I put that this text exchange on the website, and I've got a bunch more as well. So again, all right, not going to waste any more time. You know that I help lots of people, and I'd be glad to help you. You get it. So again, back to this slide here. It's a 53 since May till October. It's a $53,000 drop on $1 million home value. So again, that's about 13 to 14%. So let's take a look at different age brackets and see what's happening in this world. So 55-year-olds, yes, you're too young for a HECM if you're 55, you got to be 62, but you can get a proprietary reverse mortgage. So as you can see here, I'm not going to spend a lot of time on the proprietaries because loan amounts really haven't changed. The only thing that's dropped, let's see here, a senior with $1 million home value with a proprietary at age 55, now they're able to get just under 283, whereas before they were able to get just under 284. But these numbers are basically the same, so I'm not going to spend too much time on it. If you want a snapshot of this, go ahead and just push pause and write it down. Or obviously, again, with your own situation, if you want to know exactly what you can and can't do, what you can qualify for, and how to use the reverse mortgage, how to mold it around your situation, then just give me a shout. All right, now we're on to age 62. So 62-year-olds, you can now do a HECM, and you can obviously do a proprietary at any age older than 55. So you can see proprietaries are all the same basically. When we go to the HECM though, we have about an 8-ish% drop at a $400,000, $700,000 loan sizes drop, $1 million loan sizes drop, $2 million. You will see this as a trend throughout the age brackets that every single HECM loan size for every age and every scenario, HECM loan sizes have dropped. So we'll go on to 72. Oh, never mind. We're going to go on to a picture of me locking eyes with a raccoon. Why did I put that picture there? My kids thought it was silly. They said, Dad, this stuff is so boring. Put a funny picture of yourself. Make fun of yourself a little bit. So, yep, that's me in Bluffton, South Carolina with a raccoon who was a rescue. Funny, this one was a sweetheart, but there was a little baby raccoon who was also a rescue. I picked him up about 3 minutes later after hanging out with this dude, and he ended up chewing up my finger. I was bleeding all over the place, and it was pretty nasty. But they swore he didn't have rabies, and this was a couple years ago. So unless it's the slowest acting rabies out there, then I'm okay. Thank you for your concern. All right, on to important stuff. Age 72. How much can you get? You can see, same thing, the proprietary, it's returning just about the exact same amount of money as they did last month. The HECMs, though, the HECM has still dropped. $400,000 house, it's $12,000 less. $700,000 house, about $15,000 less. $1 million house, $21,000 less, and $2 million home. Yep, 23,000 or so less. So you get it. As time goes on, there's turmoil. Rates are going up. The effect, the impact on these reverses is you're going to qualify for less money. So age 82, how much can you get? Same thing. Let's take a look. The proprietary, yep, just about the same. The only thing is with the $2 million value, the proprietary dropped just a tiny bit. And with the HECM, yep, we're still down. Our numbers are at age 82. Our numbers are, $1 million house, $19,400 difference. So there you go. Age 92. Nope, not age 92. Another silly, stupid commercial. The ab wheel. And you don't have to be a senior to appreciate this. Yes, you have to use the ab wheel the right way. If you roll it on your belly ain't going to change. You roll it on the ground, it's a good workout. I love these cartoons. All right, back to age 92 now. Let's look at proprietaries. Here at a $700 and $1 million value, the proprietary is returning a little bit less. And look at that. The HECM actually gives, again, I think I've spoken to this in earlier presentations, but once you get into your mid 80s or so, the HECM starts performing better than the proprietary. So you can see the HECM still returning less money than it was, less money this month than it was last month. But if you're looking at the difference between a proprietary and a HECM, you're older, you need all the cash out of your home that you can get. The proprietary ends up making sense. Now, that is actually a good transition to what's the difference between a HECM and proprietary, and when should I use each? So really, I'll explain the proprietary first because it's simple. First of all, obviously, if you're under 62, if you're at least 55, you can take the proprietary. You're going to get a lump sum of cash, though. So they're going to give you all the money right away. You may, if you looked at reverse mortgages before, if you're free and clear and you get a HECM, they're going to give you about 60% of your money right away and then make you wait a year for the extra 40%. That's not true with a proprietary. They just dump all the cash in your wallet. If you're under, say, age 85, the proprietary is normally going to give you more money right now than the HECM, although as rates change, as months go by, that might change back to the HECM. It just depends. So obviously, again, ask me, feel free to reach out and I can run a scenario of the HECM versus the proprietary for you. If you've taken a cash out, say you've got a home equity line or loan within a year ago or within a year, you can't get a HECM. They'll actually make you wait an entire year. So proprietary will work. Obviously, if you need the cash, all the cash right away. And then you see if your home is worth over 1.1 million. Why do I put that there? The HECMs, the maximum home value that they'll basically appraise your house at is $1,089,000 and a couple pennies. So what if your house is worth 1.1 or 1.2 or 4.7? If you're in that circumstance and you need to get all of your money out, or as much money as you possibly can out, then the proprietary is going to usually be the way to go. Let's look at the HECM. So that's the proprietary, big picture. The HECM is like, it's been called by financial advisors, it's been called the Swiss Army knife of retirement. You've got monthly income you can get, you've got credit line growth, you can take a combination, take a lump sum, some monthly income, and the rest in a line of credit. It is absolutely customizable, and that's what I really, really love about it. Again, if you're free and clear, they're going to give you 60% of the cash right away. Normally, that's cool. That works for most people, and you will have to wait a year for the extra 40%. Again, most people are okay with it, but if you have a scenario where you do need the money all at once, a lot of times in a home health care issue, then the proprietary might be the way to go. Credit line is absolutely HECM. Monthly income is absolutely HECM. And then I put retirement safety net here. This is really the topic for another video, but normally when you can get a line of credit with a HECM, by the way, the line of credit grows tax-free year after year after year forever, never stops growing. So if you can do that, and you can use that money instead of taking out of your retirement or your assets, that instantly, and statistically, I'd say, it statistically gives you a leg up on your retirement. You're using your money more efficiently, especially now. If you think about it, home values are still at record highs or close to record highs, whereas the stock market and investments are very, very low. Ask you, what would you rather take? Would you rather take from an asset that's very high, or would you rather take from an asset that's dropped a bit? Statistically, every smart financial advisor will tell you you take from the asset or draw from the asset that's very high. You leave the asset that's already dropped so that it can grow back again whenever rates do improve. So that was a little bit of a tangent, but that's the HECM versus the proprietary. Again, if you have any questions about that, hey, what should I do? What are my options with both? Then, obviously feel free to give me a shout. All right, couple testimonials. Again, this is from Paul, whose mom just got the reverse mortgage for home health care. This one, and by the way, I'm going to go through these really quick. If you want to read them, either go to reversequotes.com or you can just push pause on this video. But this is Chuck and Millie. I helped them. They actually had a reverse mortgage on their house in Ocala, Florida, and they downsized. So they're absolute sweethearts and wonderful, wonderful to help them. I feel like that they're in a far better and far relaxed place right now. And this is Kevin. He's an attorney down in my neck of the woods. We used a reverse mortgage for him to move from Pennsylvania down to Boca Raton, and then he wanted some extra work done on his house. So we did another reverse mortgage to give him enough money to get a roof and open up a very strong line of credit. And the way that that worked, even though the rates are high, this worked because he got his reverse back in 2019, where his home value was okay, but it had appreciated about $350,000 from 2019 till present. So it's really neat that we could go in, and even though rates are higher and loan sizes are lower, in his circumstance, we were still able to give him more money for that line of credit, remember, for that retirement safety net, and to get that new roof on his house. And by the way, he used the HECM, not the proprietary, because again, we wanted to utilize the line of credit. So again, this is a website, reversequotes.com. And let's do this. How to reach us. Here's all my contact information. Listen, if you're looking into a reverse for yourself or for a loved one, then I'd be absolutely more than happy to help you. Let me get back here and we'll just look at me. I'll speak with you real quick. By the way, this is a new background, new office. So you can see the walls are very, very bare right now, but we'll get something on the walls eventually. Just moved in here a few days ago. So kind of a pretty bare office right now. But anyway, again, my name is Jason Eichmiller. I'd be blessed to help you. And if you have any questions about a reverse, again, for yourself or for a loved one, or if you just feel like you're in retirement or you want to retire and you're not sure if the assets that you have, your Social Security income, your fixed income, and then what you've saved up, if you don't think it's enough and you have a decent amount of equity in your house, well, you've got to look into using your home. There's a guide that we give with these counseling packages, and it says use your home to stay at home. And that's exactly what you'll do. You will use your home to basically draw down some money, again, whether it's a credit line, if you don't need it right now, you just want to kind of build up a side account, safety net, again, as I like to say, or if you need to get rid of a mortgage or get rid of some high interest credit cards that are beating you up, this is where reverse mortgages really, really shine. So if you need me, if you want to run a scenario by me, I'd be more than happy to help. Go ahead and give me a shout. My name again is Jason. My contact info is below. Easiest way to reach out is just to call me though. Area code 888-309-9705. All right. Thank you so much. I really appreciate your attention. I hope you had a little fun with this video. And if you need me, you know where I'll be. I'll be in this office decorating the walls. All right. Take care of yourself.